Hi, welcome back to video 3 in the Medicare series. One of the things that it's pretty funny. I actually love to do the presentations live because the audience we can interact. And I always ask the question. I guess some of the things you just should never talk about. I guess of politics and religion. So I like bring it up to get a little stir in the group. I ask the term with politics, who is better for you? The Democrats or the Republicans? Now, it's funny. I'll get so many different responses. People come up and say, oh, the Democrats are better, Republicans are better. And sometimes it gets a little bit lively. And, the Democrats ruin the country, the Republicans ruin the country. It was pretty interesting. So I normally ask, let's take a look at the root word of politics. And I'll ask if anyone in the group has ever studied Latin in high school. Or the funny part, I'll ask a lot of times, does anybody remember high school? So when we look at the term poly, P-O-L-I, it means many. Then we look at the word ticks, and ticks are blood-sucking insects. So what you're going to find in politics, it really doesn't make much of a difference who's in there, the Democrats or the Republicans. Now, let's get back to Medicare's parts. Part B. Again, it's very important to understand this. You'll hear terms, your Part B premium for 2016 is $121. The answer is depends. It depends on a lot of different things. So the costs are different for each person per month as well as Part D. What's important is this. Your lifetime costs or your what you pay for these items are determined by your choices. And a lot of folks look at me and they say, I don't understand it. Obviously, I want to choose the cheaper cost. It's not the choice of the plan. It's the choices you make on other things that are very important. You have to follow this logic. How you determine costs. Remember, number one, parts B and D have late enrollment penalties. So you have to be very careful. If you don't realize it and you enroll late, you're stuck with this extra payment for quite a while. Parts D and B, again, the late enrollment penalties. But here's the difference. Part B will give you a 10% penalty for every 12 months you missed. So if you missed a year, in that case, for whatever reason, you didn't know, you got confused, you thought you had it, but you didn't, you're going to pay a lifetime increase of 10% over what you would have paid had you not made that mistake or been misled. Now, Part D is similar. You have a late payment, but the payment is 1% per month missed. So technically, under the Part B, if you miss 11 months or 8 months or whatever, it's still in a 12-month gap. With Part D, it's 1% per every month list. So if you missed 6 months, in that case, your penalty is 6%. Number two, if you don't sign up for your Medicare B or D when you're eligible, you may have to wait until the general enrollment period. Now that runs, as we learned, from January 1st to March 31st, and where you can enroll in there. But here's the difference. What happens is this. If you miss your open enrollment, or didn't realize you should have enrolled or thought you were, and you, let's say, on April 2nd, you realize it and you enroll. Here's the problem. In addition to your penalties that you're going to pay, you may be without coverage for 15 months from April until the following, not that July, but the following year's July. So what's important to understand is pretty straightforward. You've got it, number one, make sure you have your dates right and understand if you miss, there's huge penalties to be paid. Here we have, I consider one of the facts. I kind of joke when I do my programs, I call us the gray tsunami. It's going to put huge pressure on the Medicare and Social Security systems. Number one, we got to realize this. You can't keep going to the well forever and never expect the well to run dry. Benefits are going to have to be cut. Costs are going to have to rise. deductibles will go up, as well as taxes are going to go increase. Why is that? And people say, I don't understand. But, like, the simple thing is we just continue. We have too many old folks that are going into their retirement years looking for these programs to provide as they did in the past. So what happens as the costs go up and taxes go up? What's going to happen ultimately to our standard of living? And most folks will say it's going to go down, and then the answer is true. So what I want you to do is kind of understand you need to start to prepare for these increased costs now. It's very important. You want to start preparing for increases, and how much are things going to go? How much higher? What they've done is they projected the inflation rate, or actually it's historical. Over the last 47 years, you've had a large increase in your Part B premiums, and it's averaged about roughly 7%. The average rate of inflation predicted for Medicare Part B and D through 2022 is going to be at least 5%, 5 to 7%. And your Medigap plans, your Medicare supplement plans, the same thing, are expected to increase or inflate by 5% per year. So what you're going to find is that's important to start to prepare for these increased costs as soon as you can, because most often it's going to overwhelm a lot of folks. As Medicare increases deductibles, in other words, they're going to make a little bit higher deductible, they do every year, and your Medigap policies, your Medicare supplement plans are going to shoulder more of the burden. You're going to see their prices rise. So you got to be very careful. Healthcare in this country is becoming extremely expensive, and obviously you realize that now if you had to purchase your own healthcare before your 65th birthday. The second part, if you miss any deadlines and the fact that the premiums are escalating just because of inflation, way over the cost of inflation, Medicare Part B and D are means tested. And very simply, what means testing is the more you have, the more you make, the more you pay. It's really not about health or medical history. It's strictly this. How do you plan for costs if you don't know what the costs are going to be? One of the things that changed it in 2003, they called it the Medicare Modernization Act. They said this: we're going to reduce the subsidy we pay for Part B for people that make a little extra money. Now, that terminology was used very similar to what they did with taxing Social Security benefits. In 1984, they said we're going to tax wealthy Americans, and they put a number out there, and the number was $25,000. The difference was that they never changed the number from 1984, so now we're in 2016, and they still have the same $25,000 wealthy American cap. What happens is these numbers were never set to index for inflation. Now, what a lot of folks don't realize is that when they hear the term subsidy, in actuality, how Part B premiums work is this. The government pays 75% of the cost for Part B. And they do that out of general revenues. The general tax revenues come in, 75% of the cost of Medicare Part B is paid, and 25% of the cost comes out of Part B participants. Now, realize this: the difference between 25% that you pay and the 75% or the 100% number, the 75% the government pays, that's where what they're saying is we're going to reduce the subsidy if you have a couple extra dollars. So simply is this: the more you make, the more you have, the more you're going to pay. The government just lowers its subsidy. So they're going to say, in that case, we're going to pay 50% or 30% or 20% of the Part B premium, and you're going to pay the balance. Now, what do they call that? It's called the Income-Related Monthly Adjustment Amount, and its initials is IRMAA. You may hear that bandied about sometimes, but it's the same thing with the Affordable Care Act for Part D. The same concept. the more you make, the more you're going to, or the more you have, the more means you have, the more you're going to pay. So they're going to reduce the subsidies for Part D, making you pay more because you have maybe some assets saved, or you're a little bit more frugal in your life. And it's unfortunate to say this, that if you have two couples, one was more frugal than the other, the frugal couple are going to pay more. They're going to pay more. It's going to really hurt them being frugal, because now they have some means, and the government's going to say you're going to actually pay more for your cost as compared to the couple that may not have been as frugal. I'll ask the question sometimes, what do you think the two largest expenses in retirement are going to be? And I must say, a lot of times the answers are very, very close to the correct answer. They're really going to be taxes and health care, including health insurance. The two are so tied together, so that basically if you solve the tax problem, it will fix the health problem because of the means testing in there. And the other option, obviously, if you save tax dollars, that money can be used to pay for health care costs. Now, here's the frightening part. I've been, I guess, probably close to 35 years speaking with individuals and giving programs. And statistics, and I back this up, 98% of Americans lack a retirement plan that factors in taxes and healthcare costs. And you can look at your own plan if you're thinking of retiring from that age, obviously, hopefully, if you're listening to this program. Have you thought about the tax impact? What about healthcare costs? A lot of folks that I'll speak to sometimes, I can't wait to get a Medicare. It's going to really make my costs go down. And they think, I'm going to pay less taxes than I'm retired. And a lot of folks that when they hit that number, the 65 and they're retired, or whatever they retire, find out that's not exactly true. So the question is, are you planning for it? Here's the sad part, is you have control over what taxes you'll pay and what you'll pay for these costs, but a lot of folks don't realize it. Here are the consequences for having the wrong type of income. For retirees, you'll see that possible that they may not see their Social Security increases. We talked about in the Social Security program about possibly means testing away your COLAs. Possibly lose their entire Social Security benefit. Now, that's not because you have a couple dollars. What they're going to basically say is that most of your Social Security is going to pay for Medicare. You may have to cover an amount for health care, right, to Social Security, because your check's not great enough. You also will be taxed, or maybe taxed on income that you'll never receive. A lot of folks are paying taxes on money they're not using. And you can also very, very, very possibly be in a higher tax bracket during retirement. Now, what we try to do is this. When we talk about tax issues, it's much, much too complicated to explain in this program. Now, we devoted an entire program to tax reduction strategies. So what I'd like you to do is two things. Number one is try and watch the Social Security program. If you haven't done that yet, please do. You'll learn a little bit about how Social Security income works with taxes, and Medicare works with your MAGI. It's your modified adjusted gross income. If you can, also watch the video on the tax reduction strategies. These are going to give you a good insight to some of the control you actually exercise over your costs and your Medicare, your Social Security as well, of how you can kind of control a lot of things. Now, what's important, and a lot of folks look at me like I have two heads, and they say, well, Joe, we did this investment, or we did this idea. And I asked if their accountant or financial advisor did what I call a pro forma tax return. And they look at me like, number one, they never heard of the word. And I go, well, that's important, because what we learned in the Social Security program is decisions that you make determine so much. So unless you know for a fact, you need to do a pro forma. So simply this: I'm thinking of doing this strategy, whatever it may be. They need to do a tax return and see what's the impact on my Medicare costs and my Social Security. taxation. So what happens is you need to look at all the pieces. In other words, if I'm doing A has an effect on B, which is Social Security. B has an effect on C, which is my Medicare. So I may think to do something different with A because it would have a different effect on my Medicare and my Social Security. So that's why it's very important. I usually tell people to tell you so much, and it'll give you the guidance you really need to go forward. This is the end of section 3, or video 3, and let's just do a quick review. Went over the definition of politics, and I hope I did not offend anyone. You can control your costs, which most people don't realize. Misses the deadline for penalties and no coverage. It's very, very important. The gray tsunami's pressure. As we go, the baby boomers go into retirement. Start preparing for higher costs. Your costs are determined by your income and your assets. We learned about the 2 largest expenses in retirement and the fact that most people, 98% of Americans, are not addressing those issues like healthcare costs and taxes. And you really have control over your taxes. Again, we also learned a little bit about the consequences of the wrong type of income, the tax issue. I call it my plug for the other videos. And you want to do what they call the pro forma tax return. This is always, if you're not sure how it's done, you can always contact me, or you can ask your accountant, would you do this? You pay him the fee for whatever it takes to do the return. But the insight learned from that will be tremendous.
Hi, I'm excited. You're now done with part 3 in your video series. You're making progress. As you progress a little further, I may ask you to help co-author some of my next books because of all the experience you're getting. Again, take advantage if you can or have questions of the Q&A, which is very important. Keep reviewing if you have to any of your handouts, as well as you can always back up and replay some of the sections. So looking forward to seeing you at the end of section 4. Thank you very much.